Welcome, welcome, welcome. I'm going to be sharing a secret sauce that never loses. I'm just kidding. Okay, do you guys want to know my first tip? If you guys ever join like a webinar, a Discord class, whatever, and they say something like just never loses, leave immediately. Okay. Um, this is a setup today that lost. It was like a light bulb setup, and this is just gonna happen sometimes. So this was actually set up earlier that I called out. I'm like, oh, this is light bulb, but I didn't take it because I took this setup here. I took this 1 minute long, and ended up losing. But like, just know like it will lose eventually. Yeah, this was a protected high, so that's probably why it lost. But you get the deal. So thank you everyone for coming to the webinar. I just want to make an announcement before, and my marketing people told me to say this, but I started like a one-on-one mentorship, and I'm not gonna promote it on like Twitter, or Instagram, or anything because I just don't want a lot of people in it. But there's like I think there's 16 spots. Yeah, I think there's 16 spots for now, and it has like a lot of cool stuff. Like I made this accountability program. Like, basically, I'm gonna pair you up with like 4 people, and if you do dumb shit, and by dumb shit I mean like putting 10 minis on a high you think has a hit, and then all of a sudden we reverse, and you full your account because we've all done that. If you do dumb shit, you have to like tell them, and you get like I don't know. You just have to keep each other accountable. Um, that's kind of cool. And then there's like a whole like course with like quizzes and exams and stuff, which is kind of cool. So like no one actually makes quiz questions. I think there's over like 200 questions or something. But yeah, there's 16 spots, and what else do I have to say? And we're gonna take 42 interview calls. So if you want to be personally mentored by me, on this ad break, I'll be dropping a link in what channel? Um, in the second January 12 p.m. channel. So that's the announcement I have to make before I start this, apparently. I will drop a link to the place where you can book a call here. But yeah, dude, look at this journal I've set up. You guys got to see this. And you could do this on your own, obviously, probably too, if you like have 4 friends, maybe. But look, as you guys know, trading is not all about the strategy. And if you don't understand that, then you will never make it in trading. I used to think that all the time, but that's just not the case. I used to think that, and I was an idiot. But this is basically what it looks like. This is sick. Shout out to my boy Apoff. He made this. But yeah, like I'm gonna have 4 students in a group, and everyone's gonna be able to see each other's like thing. So whatever account they start on, they're gonna be able to see their performance. And then like I'm gonna give you tips, and then they're also gonna give you tips. Like Ryan, you have to hold better for better liquidity targets. You take too much off in a negative RR, even though there's equal highs above, stuff like that. So pretty cool, and I'll be able to track your progress and whatever. And then yeah, so pretty cool. Apoff, wait, is Apoff in here? This guy made it. He's sick. But yeah, sick. So yeah, we're only be taking 42 calls. So if you guys want to go, if you're interested in that, it's not cheap, just so you guys know. But I also don't want a lot of people in it, so that's why. And I didn't make the price of it, so. All right. The first thing I want to talk about is this. I already kind of brushed on this, but obviously, will a strategy make you profitable? Yes or no? No. It will not make you profitable. Now, can it make you profitable? Is my other question. So, will it? No. Can it? Yes. There's two different ways I'm like wording that. Panos XBT. Why do you use your green? Need green? What the hell? So will it? No. Can it? Yes. But you and yourself are the edge, and you're the conviction. Like you have your own conviction, and the one thing I don't teach on my YouTube or anything, like, and I'm gonna talk about this more in my mentorship, but dude, Louis, stop saying no, bro. The one thing I would talk about in my mentorship is like I don't think I've ever made a YouTube video on it, but I'm gonna talk about like how to know you have conviction. How many times have you guys seen me post a trade or trade recaps and you're like, what the hell is this? Why do you take this? Like, has that happened to anyone before? Louis, I'm just telling it, bro. Um, has anyone ever seen like a trade recast and they're like, they swear at me. They're like, why the F did he take this? And they're free, like, they're like, oh, Dottie's not taking what he teaches. You know, I'm sure that happens a lot. And you have to realize, like, do you think, if I were to ask you this, if you were to go back 3 years ago, if you were to trade for 4 years, and I asked you about a setup 4 years ago, and then I asked you about the same setup now, do you think your brain would have do you think the neurons in your brain would have like a different reaction or a different answer than 4 years ago? Yeah, 100%. And that's what happens to me sometimes. Like I have so much time in looking in these signatures and prices, and I'm not gonna say that they're patterns, but like I have so much time looking at these signatures and prices where the neurons in my brain just are like, oh my god, like this is good. Oh, this has to hit. You know, this has to hit. This has to hit at this time, based off what I've seen, and like it's different. So like, um, oh, unenforceable. Just chill. So that's like the first thing you guys have to understand. Like I will see different setups in you, okay? But it all starts with this basis, okay? It all starts with this basis. And the first basis is, looking for something that's going to accelerate the market. Now, what accelerates the market? An iFVG, right? Now, if I draw three different examples, 1, 2, 3, let's say these are all iFVGs, okay? All right, they all got their little iFVG boxes, little iFVG boxes, little iFVG boxes. All right, we have three scenarios here. Okay, I'm just going to call them 1, 2. Oops, that's not how you do this. What the hell? Okay, 2, 3. And I'm going to ask you guys a question. If we got, what's going to accelerate more? 1, 2, or 3? Which one do you think is going to move price more after it happens? Okay, persons whose name started with a B, why are you saying 3? Just out of curiosity. Brad, why are you saying 3? I'd really like to know your answer. Yeah, obviously 1's going to be the answer, okay? Because the market comes down to like displacement and what we're displacing through. Now, obviously in these three examples, we have a fair value gap in every single one. But let's say I were to copy all three of these examples, right? Let's say I were to just move all this and copy them and move them, right? And let's say 1 was not a fair value gap anymore. Then what do you think would move the market more? 1, 2, or 3? Let's say this wasn't a fair value gap anymore. What do you think? 1, 2, or 3 would move it more? Yeah, probably 2, right? Probably 2. We're just going to make it look like this, right? And then let's say 3 has like, it takes like 4 candles to inverse. So the variable that you guys got to see here is do you see how there's multiple different variables that I'm looking at? So the first variable I'm looking at is there an iFVG? And there's obviously the first example, there's an iFVG in every single one, right? 1, 2, 3. The second thing I'm looking for is how many candles does it take the inverse fair value gap, right? That's the second variable, right? And if and the first answer would be 1, okay? If I were to ask you the question initially, you all said 1, which is correct. Now, let's say take this fair value gap away. Then what variables do we have left? Well, we have no fair value gap in here, but we have a good candle here. But in this one, we have a fair value gap and a decent candle. So now we have 2 variables in this one, but we took away 1 here. And then we still have 2 variables in this one. However, the first variable of how many candles inverses does it quicker here. So now the answer would be 2. Now let's say we add another variable. Let's say we add liquidity, right? So let's say there's liquidity here. Now let's say there's an iFVG in every single scenario, okay? 1, 2, and 3 all have an iFVG. But let's say 1 doesn't sweep liquidity, and let's say 2 and 3 does. Now, what would be the answer for which one's probably going to displace faster? Yes, still 2. Now, this is only 3 variables. There's a lot more. There's time. There's are we delivering off fair value gap? Now, let's say I were to put, there was a liquidity sweep here, and there wasn't one here, but let's say there's a fair value gap here. What might the answer be then? Might it be 1, 2, or 3? Yeah, probably 1 if I had to guess. But then that goes into another variable, like it could be the 6 or 7 variable. Like, what's the daily bias? Are there equal highs? Are there equal lows? Where's the target? Do you see how many variables I'm looking at, like in making things change? I can mess with a whole bunch of different variables here, and there's so many different options. Does that make sense, everyone? Now, how many people came in here, or how many people have followed me on Instagram, followed me on Twitter? They've seen my TikTok videos, and they think, oh, all Dodgy does is wait for a bullish inverse, and then we wait for it to get wrecked. Did anyone come into this thinking that's all I do? Type 1. So that's what a lot of people initially think, but there's a lot more variables that have to do with that, okay? There's a lot more variables. All right. So that's like a big thing that is really important, and you have to understand like how many variables there actually are, and I'm only brushing on a few of them. So I want to just talk about more time variable, and I want to talk about like the liquidity / fair value gap variable, okay? Like how to know something's a pattern trade, not a pattern trade. So I'm gonna ask you guys a question. We had an inverse here earlier, okay? And it ends up working really nicely. Now we come down, we sweep below, whatever. Now, pretend you don't know the higher time frame here. Just pretend you don't know it, okay? So let's say you don't know the higher time frame variable, okay? Do you think this would be generally a decent setup? Yes or no? Don't answer. I'm going to do a poll. Wait. Okay, yes or no? If you couldn't see the higher time frame here, all you saw was this little liquidity sweep, do you think this would be a decent setup? Yes or no? Everyone vote. Okay, so we got 52% yes, but 49% no. Now, I'm going to ask you another question. Let's say you saw the higher time frame here. Let's say I showed you like the 15-minute, and let's say you knew the higher time frame, okay? And you saw this low here. You kind of saw I don't know, it kind of looks like we broke this a little bit. It looks like we closed below that. And you kind of see this. All right. Now, I'm going to ask you the same question. Now you kind of know the context of the trade. And now I'm going to ask you the same question. Do you think this would be a good trade? Yes or no? Now we got 80% saying no and 20% saying yes. So do you see how one variable changed that answer like completely? See how we have 52% yes, 48% no, but then now it's completely changed because now I'm showing you context of oh, here's a whole nother variable of, okay, we kind of look bearish. It kind of looks like a market maker model. We close below this. This is probably going to be the drawn liquidity, right? And it just show you that, like, yes, this trade does work, but it's also not a good trade. And that's like a big variable that, like, higher time frame bias is a main variable. So in my opinion, and this is my opinion, of course, I think the three most important variables are all, I think the most important one is liquidity, like drawn liquidity. Where is the drawn liquidity? I think the second one is time. Actually, no. I'm sorry. First one is time. I think the second one's liquidity. Okay. And then I think this third one is, and this is a variable I don't talk a lot about on my YouTube because it's not like this is more subjective, but how obvious. And I'm not going to say how obvious is and then so-and-so do an example, because when I say the question how obvious, it could be anything. It could be, is this high we're sweeping obvious? Or are we delivering off an obvious fair value gap? Do you guys get where I'm going with that? Like, it doesn't have to be how obvious is a high or how obvious is a fair value gap. It has to be just how obvious in general is the context as a whole. Does that make sense? So it's never like a single thing of how obvious something is. Like, how obvious is the fair value gap? How obvious is, the delivery? If I were to ask you a question like this, I'm going to give you two scenarios. I'm going to give you one here. I'm going to give you two here. Let's say we saw this. That's scenario one. And let's say we got two. What do you think is going to be more obvious? What do you think is going to be more obvious of a liquidity sweep, one or two? Yeah, it's going to be two, right? And if you do say another number besides two and I do not ask, you will be muted, just so you know. So yeah, like, and again, that's an example of how obvious something is. Now, what if I were to draw a fair value gap? What if I were to draw this and then this and ask you, okay, and there's no liquidity sweep, one or two, which is more obvious? Yes, still two. Okay, now what if I were to make it a little more difficult and say, oh, there's a liquidity sweep here, and there's a super obvious fair value gap here, but not the greatest liquidity sweep, but then there's a tiny fair value gap here. What do you think would be more obvious? Yeah, probably one, right? So there's multiple different variables and things, and that's like something you really got to understand. Now, I'm going to show you an example of the 1 minute time frame right now. And this is actually a little thing I want you guys. So everyone, I want you to do a little homework assignment, a little short term, just real quick. I want you to go in your NQH 2022 chart or NQ1. It doesn't matter. Now go to the 1 minute time frame and send me the chart. I want you to draw one thing on your chart only, one thing. And there's something to the left that I'm looking at that I can very clearly see right now that I would kind of use to determine like where the market's going to be headed. And I want you to draw what that is. It's, if you have anything else in your chart, you lose. So hide all your indicators, hide everything. And I want you to send in the chart. What do you think I'm looking at right now to kind of, for me to determine like what's the most obvious variable here? I want you to draw it in your chart and send it in chat. Okay. One person got it. Oh, two people got it. Two people got it. Yep, three people got it. Okay, so the answer is this. This right here. Now, is it wrong to combine this? Yes or no? Can I combine this in the one fair value gap, technically speaking? Yes, I can, right? Because they're both obvious. Why would I draw two here? There's no point. If you ever do this, I guess you can, but obviously the zone as a whole would be obvious. So just from taking a look at this chart, like, I'm drawing the obvious, and now how do I use this gap? How do I use it? Well, I'm using it to where, okay, if we close below this, I bet you we're going to dump. You know, I bet you we're going to go probably back down to that sell side, which I thought I was going to hit earlier. So this is kind of the play I'm looking at right now, right? But now let me take this away here. Okay, let me take this away. Let's pretend this wasn't here. Would I have anything to say, yeah, we're going to go down here if I took this away? So yes, the answer is no, I really wouldn't. So you can kind of see there's the entry, you know, and then you'd move break even, you'd go break even here. So again, you can kind of see like if I take this away, then it'd be a whole different situation. Now, whenever I'm looking for a fair value gap, or whenever I'm looking, and this is where it gets a lot more advanced, and this is why I didn't want any beginners in here, okay? There was an example on the chart earlier where we had this. Okay, so I'm gonna name all the variables I saw here on this play this morning. So I had sell side. This was my first variable. This is where I had the draw liquidity. This variable right here. Okay. Yes, that's obvious, Dean. I agree. So this is my first variable, right? And it was the sell side. My second variable was this 5-minute fair value gap. Okay, I had that drawn this morning. I was kind of using that for my bias. Okay, and my third variable was the most important, is time. Okay, so I'm going to draw out the macro here, and then on the 10:50 to 11:10, as you guys know, is the macro, because you guys should all be advanced people, so I'm not going to spend time going over the macro. Okay, you got a macro here, and then you got a macro up here. All right, so here's our two macro times right here. You can see the break even did just hit, so there's the break even if you are in the short, just so you guys know. And then first TP would be, where would the first TP be? First TP would probably be this low here. So this is going to be first TP. And then second TP will be obviously this low. Okay, so let's keep going. So we had my variable. We had my sell side variable here earlier. We had a 5-minute fair value gap variable here, and then we had our macro times. Now, typically during the macro times, that's when you want to see price run the lower high. Now, I'm going to ask you a question. During this macro time, was there any relevancy to this sell side down here? Was this sell side relevant during this time period? Were we close to it? Did we have momentum going towards it? Did we have an iFVG going towards it? Did we have anything that made this sell side relevant? No, because price wasn't even trying to go there at this time. So I'm just going to take away that variable. That variable did not matter to us at that time. Now, I'm just watching this play right here. So now I'm going to go to this macro time. Did this macro time have any relevancy to the sell side? Did we go down? Did we form an iFVG during this macro time to the sell side? Yes or no? There's first TP, by the way. So scale half there if you took that. And then second half would be down here. How many people took that? Anyone? Again, you can kind of see, do you guys see why I'm drawing this obvious zone? Because I know if that breaks, we're going to go that lower, you know? Now, again, if that wasn't there, do you think I could have predicted that down move there? Like, do you think I could have predicted that? No, absolutely not. The only reason I was able to predict that because of this obvious variable, right? But if this variable wasn't here, I would not have been able to predict it, okay? Now, you're probably wondering, oh, but it's lunchtime. Yeah, but look what happened before lunch. Since 10:20 a.m., what's been happening? Chop, 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 chop. And usually what happens during lunch after this? Well, lunch is usually good, right? That's another variable. So I'm using all these variables like, oh, before lunchtime, choppy. Okay, this is probably a decent setup because we're choppy all the way here. So that's another variable. But going to the play before, right, we eliminated this variable because it had no relevancy with going to the sell side. But we're going to keep this variable because it has relevancy with going to sell side. Okay, so those are the two, those are kind of the two scenarios that I want you to understand. Now, what other variables do we have? Well, we have this 5-minute right here, okay? And during this macro time, did the 5-minute candle close below? Yes. And this is where it becomes a little advanced. Sorry, I'm just watching this TP real quick. This should hit. And again, remember, this is the higher time frame sell side I wanted earlier. Now, have you, and this is where it becomes advanced, and this is where I know only the advanced people in here are going to understand this, but have you ever seen a setup here where, have you ever seen the signature and price, but instead there was actually no fair value gap here? Have you ever seen that before? Yes. Okay, and a lot of people have been trading for a long time can definitely say the same. Okay, so you've definitely seen this before. Okay, and let's see, this should hit. Yo, low-key, I might make an Instagram video for this. And there's final TP. Boom, baby. Not even a single green can on site. And I just called that live. So wait, I just gotta do a little Instagram video. That's sick. That just hit. I was not planning on that. I did not plan for that to happen. All right, boys. So we're doing a webinar right now, and I accidentally called this play live. I did not even think we are gonna get it. How many people click that? Type W or 1 or whatever you want to type. So you can kind of see during the webinar, I was literally just explaining how you could use this because it's obvious to tell me we're going to go down to this low. So you can actually see it work perfectly. I did not plan this. The webinar has been planned for 12 p.m. I did not know it's going to happen, but it shows obviously me calling price live, which, yeah. Okay. Okay, sorry. I just need the Instagram video. Now, how many people doubted I could call price live? Now they're like, damn, Dodgy knows what he's doing. Probably no one because you guys all know me, but. Okay. Now, going back to what I was talking about before, right? If I eliminate this variable and this fair value gap right here, does that change other variables? Does that change other variables if we were to take away this? Yes, it changes everything. It changes the draw on liquidity. Now, if I go back and replay this, and I go to the 5-minute time frame with what was happening before, we have a 5-minute V shape, a 5-minute BPR, right? And we have a 5-minute BPR here, right? Would you guys agree this is kind of like two major like ping pong areas we're kind of just bouncing between? Right? Okay, I would agree that. So right now we have like a ping pong table, right? But let's say we're to eliminate, this and this and this, and now there's no fair value gap here. I'm gonna ask you a question. Right here, I'm gonna ask you a poll. Okay, I'm gonna do a poll real quick. Now the question is gonna be, are you confident bias? Yes or no. Okay, and this is really gonna show how things change. So yes or no, just answer that poll. Don't no one else type anything because I'm gonna do 3 polls in a row. Do not type anything in chat for like the next minute, please. So the question is, are you confident bias? Yes or no? I have these 2 BPRs drawn. Okay, so it looks like most people are saying no for the answer. Now I'm gonna take away a variable now. I'm gonna take away this. So pretend there's no fair value gap here. Pretend there's just this one right here, okay? And we broke it. Now I'm gonna do the same question. Are you confident bias? Yes or no? So answer that question now. We're eliminating this variable right here. Yeah, I'm recording this. So now you can actually, a lot more people are confident, are voting yes. A lot more people are like, yeah, I'm confident bias here. And why is that? Well, because there's no other things that are going to stop us. We eliminated this. We broke the only fair value from the leg. Now it's very clear to me that we go down here. Okay, now let me do one more. Let me eliminate this. Okay, let me eliminate all this, and let me eliminate these death candles. Let's say we went down, but we didn't get death candles here. Okay, and now I'm going to ask the same question. Are we confident bias? Yes or no? So I eliminated more variables at this point. So now you can see a lot more people are actually saying no because, right now we don't have any death candles. Now we have no variables to tell us, yeah, we have to go to this low. So do you see how when I change multiple variables, which technically speaking, there's infinite variables that could happen. Do you see how like it all changes like with different time frames, different fair value gaps? And that's like something you really, really gotta like, and that's why I always teach people like you gotta really know that to surf through the time frames. You know, some days there's gonna be this 5 minute that might hold us up, right? Now, and we're gonna ping pong here like we did earlier, right? And then if there is, well then you're not confident here. But then okay, now we broke it, right? Sorry, I just gotta change this 5 minute, right? Now we broke it here. Okay, now I'm confident bias again. Now I know we're likely going to go down to that sell side, right? Versus as before, you didn't really know because we were ping ponging, you know? So does everyone like get what I'm trying to say? Like with variables and eliminating and, you know, you change your answer. It's like taking a test in school, right? You start reading the first sentence of the question, like, oh, I got this. But then this next sentence says, oh, but also keep in mind that the gravity is blah, blah, blah. And then it changes your whole answer. And that's what you really got to learn. Like when you're trading and you want to get really far in this game, you have to look for all these variables and all these different time frames and ask yourself like, okay, this variable will likely cause this, but if it's not there, then maybe I don't take a trade, you know? Maybe there's, if we go like to the 4 hour, you know, if this fair value gap just didn't exist, well then how would I know we're going to go to the sell side? I wouldn't, you know, because it does, I know we're probably going to go to the sell side. Right? But if it didn't, do you really think I know that? Probably not. So like drawing all these variables out and like kind of connecting them and kind of how I'm showing you is going to be super, super important to your journey. And it's not something that beginners really get right away typically, but like you need to be able to look at multiple time frames, mark out the variables, ask yourself like, okay, what if this wasn't here, you know? But it is, you know? So I guarantee you we'll go to the sell side, right? And obviously this is not financial advice, but we broke this 4 hour, we just do you and you have to ask yourself like the other side of the trade, do you think if we were bullish, do you think this would have happened? Do you think if we were truly bullish, would we have like knifed this? No, absolutely not. We would be holding this 100%. Okay, so that's like a big thing you gotta understand as well. So that's that. Now the other question I get a lot is, and a lot of my like beginners won't know this. Someone asked me the other day, like, why don't you take candles with only 6 candle reversals like you teach on your YouTube? Why might I not take setups that only have 6 candle reversals? Why am I taking setups that sometimes have like 10 candle reversals or 15 candle reversals? Yeah, draw on liquidity. Like, same thing with this. Why was I able to say this is probably likely going to dump if this broke? Even though we went up and there was like 20 million candles here. Well, because draw on liquidity. You know, I said, I think the draw on liquidity is down here. I've had that draw on liquidity all morning, and I think it's going to be here too on the 4 hour. Right? That's why I'm able to tell. So, and that's why a bot really doesn't work with iFVGs, because if you code a bot to only take these setups up here, do you think it's going to be able to take these setups down here? No, these are all subjective. You can't just tell a bot to take, oh, only 5 candle reversal, or oh, but if the draw on liquidity is bearish, which how's the bot going to know that, then take a 20 candle reversal. And those are just all variables you got to think about when you're taking a trade. Okay. So that's that. Another thing I want to talk about is like looking at key reversal time. So like, I don't really talk about this a lot, but using the hourly time frames, trying to short and long it wicks. Yeah, it's a lot of what if statements. A lot. Okay. Another thing I like to look for is like using the hourly wicks. And I've been doing this a lot more the last year, which I don't teach this on my YouTube at all. But if you ever look for like, if you ever see an hourly open, right? What do you notice on every single daily candle here? What do all the daily candles have? You would know. Yeah, they all have wicks. Okay, every 90% of candles in existence on NQ all have wicks. So if we're bearish, are we typically going to get a wick to the upside? Yes, always. And that's like another big thing I'm always looking for. Like, did we trade up before going down? Like, see how this 4 hour candle open and we actually create this wick up here and then we go down because of drawing liquidity, right? That's like a big thing to, um, that's a big thing I've been looking at recently. So there's some indicators in this, but what I'll like to do is I'll draw like the hourly open and then I'll go to the 1 minute time frame. I'll be like, okay, is there an inverse here? And is there an inverse in this one? Yes or no? Yes, there is, obviously. So that's another spot where you're going to find very high probability iFVGs. Okay, so like, right, we have the hourly open, right? The hourly open opens at 12 p.m. Do you guys understand this is 12 p.m. and this is when it opens? Right here. See how we go above it? Now, do we have, no, this is where the variables come back into play. Do we have a variable here, anything to short? No, we don't. There's just nothing that exists. Now, do we have one here? Yes. Now, let me ask you another question. Did we need to get this one here? Like, did the market have to print this for a value gap here? Is what I'm saying. Yes or no? Let me do a little poll on this, actually. So my question is, did the market have to print this for a value gap? The answer is no, it didn't. Right? How many times have you guys seen a liquidity sweep like this where there's just no fair value gap? Quite a lot, I'm assuming. You know, the amount of times we got a liquidity sweep with no, like even here. Have you ever, so we're just going to say that was low day for the time being. How many times have you been watching the chart where we will get a bullish fair value gap right here after a like really obvious sweep at the same time frame? I'm not going to like the 15-second or 5-second, but oh, there technically is a fair value gap here. How many times have you guys seen a sweep and then we do get a fair value gap here? Probably quite a lot. You know, but in this situation, we just don't happen to get one. And that all falls back onto reacting, not predicting. You know, so same thing with this. You know, this is more of a reaction, not a prediction. You don't know this fair value gap on a form, and that's actually where you get a lot of your light bulb setup. So you see the fair value gap form, right? You see it. You can actually see where you're delivering off this 30-second right here, which is kind of nice. But that's like another thing with like reacting, predict, blah, blah, blah. And, we didn't have to get this, but the market happened to print one, and it just made the setup a lot better. Would this have even been a setup if there was no fair value gap here? No, it wouldn't have. And a lot of people are like, oh, why didn't this work? Or someone texted me the other day or DM'd me. They're like, yo, why is this liquidity sweep not? They're like, what did they say? They're like, oh, there's a liquidity sweep here. Why didn't it work? Well, because there's no fair value gap. But then they showed me another example. They're like, oh, there's a liquidity sweep here, and there's an iFVG, but why didn't this work? And it'll be because there's equal highs above. And then another person DMs me like, oh, there's no liquidity sweep here, but a fair value gap. Why did this one work and the other one didn't? Well, because drawing liquidity. So it all falls back in like variables, and it just, I can't, and that all comes through experience, but you're going to get that experience by marking and knowing all the variables I'm teaching right now, right? And just kind of understanding that different variables will produce different results. And as I showed you with the polls I was doing, you got all different answers based off the variables we had, right? So like that's where a lot of like my advanced entries come from, and just it's a lot, but it takes a little bit to kind of learn all the variables. What is a variable? Like, how are we trading with time? What time is it, a macro time? Stuff like that. So that's pretty much all I want to cover. And it's not like I can go in the chart right now and teach you like, oh yeah, this variable is this, because everything's hindsight to me. The only time I could teach it is live time. So like kind of like how I did earlier. I taught that short in live time, which I was not expecting. But that's like the big thing you guys gotta understand to be profitable. So was there any like big questions about that? Because it's more advanced, not beginning basic stuff. I'm not trying to, I'm definitely confusing beginners, but yeah. So I kind of already talked about the proximity thing. like proximity is important because it's important, but it's not important because the proximity from this fair value gap to this fair value gap was quite far, but it still makes sense to work because of how obvious this was. Now, let's say I were to eliminate, let's say I were to eliminate this variable here. Would this still make sense to take? Yeah, probably not. It's just too small at that point, but it's good even though it's far in proximity because it's obvious. But if it was far proximity and not obvious like this, well, then I wouldn't take it, right? Now, what might that mean? That might mean the opposite up here. Let's say there was a tiny fair value gap, but it was close in proximity. Let's say there's a fair value gap like maybe this big, that's fine. But it was very close in proximity, like 3 candles. Well, then would this make sense to take based off like maybe you see LRLR down here? Well, yeah, it would. So it's kind of the opposite from this example. Like this one is smaller but close in proximity with LRLR below, but it still makes sense to take this based off momentum. But it might not make sense to take one this far away if it's not as obvious. But because it was, you could take it in far proximity. So there's 4 different things I'm talking about. Like, is it close in proximity? Yes. Is it obvious? No. But is it drawn liquidity obvious? Yes. Well, then you could take it. That's 4 things I'm thinking of. And on the other hand, it's like, okay, this fair value gap here, this is far in proximity, and it's obvious, and the drawn liquidity is lower. So would that mean to take it because of drawn liquidity? Likely yes, right? How do I find daily bias? Same way I take my entries. I literally just look for higher time frame inverses. So the daily bias today was likely bearish because, like I said before, and this is where it all comes down to variables. Does this variable have to be here? No, it doesn't. You don't have to have a fair value gap here, but it is. So I'm going to use it, right? If this wasn't here, do you think the bias would be a little harder to determine? Yes, 100%. But because it is here and because the market's tipping its hand at me that we're breaking this, it's not that hard to determine on the daily time frame. Now, today in the lower time frame, I think the bias is hard in the lower time frame today. This V-shaped recovery back up was just made no sense to me. But other than that, daily bias pretty straightforward. I just started a you can subscribe to me on Twitter for $1 a month or whatever. And yesterday night I posted let's see what I posted. All I basically posted was this. If I can go to my subscription. I think I have like 4 subscribers. I don't promote it or anything, but let's see, where's my sub? Okay, so right here. So all I posted yesterday night was, I posted 2 things. Hi, 1 subscriber, because I don't know, I just don't, whatever. But I said daily chart to me looks like it will go down, right? Because due to some internal sell sides going to New Year, and then it will look for daily iFVG probably down here to buy the dip or whatever. But you can kind of see daily chart very bearish, but today the lower time frame wasn't that good, like wasn't that straightforward. So the lower time frame did trick me a little bit, but the higher time frame very easy bias. Right, and the other thing I don't understand is if you're trading on the 4 hour, you're taking a swing position on the 4 hour, will you truly care about what the 15 minutes doing? Yeah, no. If you're ever taking a 15-minute trade, you don't care what the 1 minute's doing. Or if you're ever taking a 1 minute trade, if you're most of you probably take 1 minute trades. Do you guys ever check the 5 second just to see what it's doing? Barely. No, this doesn't matter what it's doing. Same thing with here. Like I called on my Twitter, yeah, the bias is definitely be bearish today. I mean, you can see we inverse this daily gap. And it's just one of the things where like we're delivering from this gap here, where this is technically not really an inception gap, but we're delivering from a bearish gap, it just made sense to go down. Now I think we go lower. I think we go to here, but this was my kind of first target that was reached. So and now let me ask you to end things off before I answer some more questions. How many times a month do you think the daily has a very easy bias? I would say like twice a month, something you get something really obvious. Because do you really have a bias here? Is there anything like obvious here? No. And look how many days in a row for a full month. We don't even have a daily bias. It's like obvious this whole month. This was September. Look, September 20th to October 20th. There's like nothing here. So you wouldn't be able to use a daily chart. Right? But let's say I were to go to like right now. Was this pretty obvious? I think so. Was this obvious to the upside to go up? I think so. But is there any other scenarios other than these two scenarios here that are obvious? No. That's where you got to go to the 4 hour. So yeah, there's my target on the daily. There's my final target for today. Actually, that's the final target I wanted today. I gotta update that the next commentary, but yeah. Okay. Any more questions? Any more questions? Wait, what the hell? All right, never mind. All right. Do you hide some variables for the premium members? Do you share them all in your videos? Just to it's not hiding variables. It's like, yes, I do, but okay, people who watch my live streams every day, would you say I hide variables that I talk about in my live streams when I'm reading price live versus like when I'm teaching my YouTube videos? Like, if you've ever joined my live stream, do I talk about like 10 times more? Okay, what I'm saying is there 10 times more I'm talking about when I'm watching price live? Like, is there like all these little things I'm kind of mentioning and just saying that like is more than YouTube videos? Yeah, I would say yes. I mean, in my opinion, it's not like other variables. It's not new variables I've been taught, but it's combining everything together. Like, I'm combining over 50 things I've learned. Like, I don't know. Does that make sense, everyone? So it's not like I'm teaching new variables in my live stream. It's like I'm combining them in ways that I don't ever teach. Because it's all experience in reading price live at the end of the day. It doesn't. I could call out shit in hindsight. It doesn't matter. So, how to use order blocks with iFVGs. I've done a class on that before. I think if you type in. Yeah, and the other thing, could I do a recap what I mean with time? Yeah, I kind of already did. Like, um, second. Um, yeah, I mean, if there's any questions on like anything in advance, I can answer. Do I have a track record for 2024, like percentage a month? Yeah, I was down 69% last month, unfortunately. So I blew my count. Um, what would you say about this 45-second long at 1026? That was a good play, but see, that's exactly what I'm talking about. Look at this. Exactly what I'm talking about. RPK just said, what would you say about this 45-second long at 1026? What was I saying before why this was like a bad play? What was happening here? That were like hidden variables that you can't see. Yeah, we were between like two major 5-minute fair value gaps. But would this have been a good play if maybe you this was really complicated. But would this have been a good play if maybe you eliminated something? Maybe eliminate this fair value gap and there's only this fair value gap, and maybe we swept the higher time frame sell side here. Then yeah, it would have been a good play. But at this time, the 5-minute was just they were in between two spots and there was 250-50. And that's just a fair value. That's just like a thing you have to know. How long did it take me to be profitable with iFVGs? I don't know, like a year, because I didn't always use iFVGs. Well, no, I can't. That's a lie. I can't answer that question because I was low-key profitable before iFVGs. So I can't answer that question. my best advice to everyone here is there's no single right advice. There's no single journey. There's no single perspective. There's no single journey you will take. Everyone's journey will be different. Everyone's profitability will be different. Everyone's will blow different numbers of accounts. Like whenever you see an advice video, how did you grow your business on Instagram? It's always different advice. There's different things that work for different people, right? You might start copying my iFVG strategy, but you might switch it up a little bit by the time you get you really know what you're doing. So how many people have started using my iFVG strategy, but they kind of added their own twist to it? Anyone? Yeah, so other people have probably done that. See? What do I think about the 3 minute long? Well, right now, um, it's all right, but because my objective hit for the day, I don't really have another draw on liquidity today. So it's all right. It's good mechanically, but it's like an A setup mechanically, but subjectively, it's like a B setup. It's just not. I don't know. You're just kind of targeting nowhere in the zone. Like you're just targeting this random zone. So yeah, 1 minute. No. Hell no. We just swept the higher time frame liquidity. I'd never ever take this short ever. Bad short, even if it works. How much of my income do I rely on trading now that you've grown? You've obviously expanded to other businesses. I don't know how to get into that. I I just know how to answer that. How much of my income do I rely on trading? Obviously not all of it. Probably 20% of it. But there's not really a number. I don't trade for you. I don't trade for P&L. I trade the model. I execute. I don't look at my P&L. I'm not making trades to live. I don't have to make a trade to buy food next month is what I'm saying. And that's why I tell people if you're trading based off your paychecks, don't trade because that's not good for you. Like I don't even look at my P&L barely at the end of the day. Never look at it. I just trade to execute and then I just naturally make money because I'm focused more on the process, I guess. I don't know. That's not really a good question. A lot of people, if everyone ever tells me if I'm ever in a one-on-one call and they tell me yeah, I need to make this trade to pay off my rent next month, I'm like, bro, you can't. Then that's not trading, that's gambling to try to make more money to pay off your rent. I have a real estate business, Isaiah. So all right, one more question. Can I talk about more about context? I kind of already did. Here, would this be a good set? Is this technically a good long setup? Is this a good 2022 model? Yes or no? For anyone who knows the 2022 model, yeah, is this a good, in context, is this a good 2022 model? Yes or no? Yes. Now, what if I were to move, what if the higher time frame sell side was here? Would this be a good 2022 model? Yes or no? Yeah, exactly. No. Now, what are, what other tool are you going to need to see that? What are you going to need to do? What tool do I need to see that? Yeah, I need to zoom out. And how do you zoom out? Yeah, you go to the higher time frame with your mouse. You click this 1 hour button and you zoom out. So that's a bit that's a context. How do you check context? Well, check the hourly time frame. Where are we? What are we delivering off of? What time is it? Are we in a macro time? Is it a 10 a.m. reversal time? Is it 11 a.m. reversal time? Just stuff like that. Right? So if this sell side was down here, well then in context this wouldn't be a good trade. But because it's right here, this is technically a good 2022 model. I'm saying that with quotes because it's technically hindsight. That's on my YouTube. See, Mantis, that's like a question people should know already, like what a macro time is. That's why I said if you're a beginner, do not join. I worked a 9 to 5. Well, I never worked a 9 to 5. I worked as a dishwasher for like 4 years. Yeah, I just basically use iFVG for bias. Okay, wait. Before we end the webinar, okay? Reliable, can you come up here and give like one piece of advice regarding iFVGs and just being profitable? Oh yeah. All right. Thank you. So yeah, kind of what he was talking about before, like, and that's definitely good, like non-financial advice. But like sometimes what will happen is we'll get like a giant iFVG here, but then like it's just invalid or the stop loss is too big. So what can you do? Well, you can wait for price to come down, and then we maybe get like a lower time frame long in this giant zone. And we actually did. Did you guys take that this morning? Did anyone take it? Does anyone know what I'm talking about? So here's technically like the initial, and this is reliable saying not to take. You know, he's like, don't take these. Too big stop loss, whatever. And then he's saying wait for like the confirmation setup. And what he means is see this, see how the 5 minute wick held, and then see how you got the confirmation set up here of now this is the way tighter stop loss. And then you could have targeted like 101 maybe. I guess you could target here. Right. And the reason why this is going to play because like, we actually had equal highs, you know. And it was also during the macro time, which is another variable, which is the most important variable in my opinion. So, yeah, the macro time helped there. So, yeah. All right, that's it for now. Again, if you guys want to book a call, just to again, you don't need to buy anything if you don't want, but if you want to book a call, check out my mentorship. I'll send like the link and like the whatever. Okay. I actually already sent it at 12:09 p.m. So you guys can see it here if you want to do it. Again, if you're not serious about it, don't even think about it because it's just a waste of my time. So, yeah, that's actually pretty much it. Okay. So look, we do have this 1 minute short, but this is technically a pattern trade. Does everyone understand why this is a pattern trade? Why is this a pattern trade? Because we already hit the 1 hour sell side. You know, we already swept this low and we dumped 100 million points, right? If this works, you're just lucky, pretty much. Right? You want us to retrace up to like premium or something. This is just way too low short. So it's a pattern trade. How much for 101? I don't do 101s. People ask me, but I usually don't. I just have too many people. That's why I'm doing like a personalized mentorship because I'll give you like 2 free 101s a month and just other random crap and yeah, I don't know. Oh, that's free. You can book a call for free if you want. Just see like where you're at. Ugh. There's only 16 spots though right now. And a lot of people like this is like the mentorship is gonna be something where like I don't want you in my mentorship for like 4 months. Like I want you to like take the material, learn it, whatever. And I guess you'll get free lifetime access to my Discord too, which you'll be able to watch my streams. But I don't want you to watch my streams. I want you to like make money yourself. If that makes sense. I mean, you could watch my streams, but like, I don't know. Yeah, Reliable does one-on-one sessions. I think he does $200, and he actually will sit live with you. He'll sit live with you for like an AM session, I think, and then you get a free month of PM stream. That's what he's doing right now. So yeah, so Reliable sits with you through an AM session, which is kind of cool. I can't do that because I have to live stream, but show how I mark on my premium discount. I just draw from the most obvious impulse legs. You know, remember the third variable. What was the third variable I talked about today? That's like I think this is one of the most important things. It was number 3. Yeah, it was obvious. Do you think this is obvious the way I just drew that? Do you think that's obvious the way you just drew it? Does this look very straightforward? Yes, it does. So that's how I draw it. Do you think this looks very straightforward and obvious? No, exactly. Do you think what else? Do you think this looks very straightforward and obvious? This one right here. Yeah, I mean, not really in the grand scheme of things. Okay, what about this one? Do you think this looks very straightforward and obvious? Exactly, yes. Like, and how do you know that? Well, some of you guys are saying yes based off of what? Yeah, you're just saying it based off experience. Also, like knowing, like, oh, knowing, like this is pretty obvious. Okay, well, um, second. I'm avoiding you. What are you saying? That would be, yeah, I would say so. Lolly it. What is there? A 2-minute, a 3-minute iFVG, but 2-minute one inverses? Should I wait or go on based off conviction? If there's a really good liquidity pool, then you wait for the 2 and 3. If there's not, then no. If there is good liquidity and you really are confident, then you could take the 2 or 3, whichever inverses first. But you have to have conviction. That's something I can't. You have to trade a lot to have that. But if there's a 2-minute, 3-minute, but there's no obvious strong liquidity, then wait for both. Yes. So, which macro time is best to trade? They all are. They just have to have context with where the drawn liquidity is at that moment. So, I mean, 950 to 1010 is good, but all right, that's it for now. Oops. If you are truly serious about getting mentored 1-on-1 by me, book a call. It's free, and yeah. So there's only 16 spots. That's like the last thing that I need to say. And yeah, that's pretty much it for now. If I ever change any of your guys' life, make sure to tell your kids about me. Be like, yo, this dude Dodgy like changed your life, bro. Yo, Dodgy is the reason. Dodgy's the reason I have a Bugatti right now. So yeah, enjoy the rest of your days, and yeah, I'll see you all later.